Welcome to Earnings Digest, your go-to podcast for everything stock market related. Today we're doing a deep dive into a special edition, focusing on the U.S. economic and market outlook for 2025. It's a fascinating forecast packed with potential opportunities and, frankly, some head-scratching contradictions.
Yeah, we've got strong growth predictions, but also potential risks. Shifting market dynamics. It's going to be a year that demands a flexible and informed approach to investing, to say the least.
Okay, so let's unpack this. The first thing that jumped out at me was Goldman Sachs' prediction of 2.5% GDP growth for the U.S. in 2025. That's above average for advanced economies. Sounds pretty rosy, right?
It does, and the driving force behind that optimism is, robust consumer spending, especially among those high-income households. Think pent-up savings, low unemployment, rising wages. They got the firepower. But here's where it gets tricky. The consumer landscape is anything but unified. Lower-income households are staring down a very different reality, with inflation eroding their purchasing power. So you could see a scenario where luxury goods and high-end services boom, while discount retailers struggle. It's something investors need to think about carefully. Where is that demand going to be concentrated?
So uneven growth across sectors. That's a crucial insight right off the bat. And I'm guessing this potential pitfall ties into some of the broader growth risks the forecast highlights.
Absolutely. Things like tariffs, immigration policies, persistent inflation. These could all throw a wrench into that seemingly smooth 2.5% growth trajectory. Take tariffs, for example. Even targeted tariffs on specific goods can trigger a domino effect. Slower global growth, further supply chain disruptions, even worse inflation. It's a mess no one wants to deal with.
And it's not just about the direct impact, right? It's about the uncertainty it creates for businesses and investors. If you're a company trying to plan for the future, how do you navigate that kind of unpredictable landscape?
It's incredibly challenging. And then you layer on the potential impact of immigration restrictions, especially in labor-intensive sectors like construction. Fewer workers means projects get delayed, costs go up, and that wage inflation we're all worried about gets even harder to control.
It's a bit like the Fed is walking a tightrope, right? Trying to tame inflation without sending the economy into a tailspin.
Precisely. And that brings us to the stock market outlook for 2025. Which, if the predictions are right, is going to be a white-knuckle ride.
Oh, buckle up, folks. Give me the lowdown. What's driving this expected volatility?
Well, you've got a major shift happening. Leadership is moving from growth sectors like tech to more cyclical and value-oriented sectors like financials and industrials. On top of that, we have the lingering policy uncertainty, tariffs, immigration, you name it. And the market is going to be hypersensitive to every piece of economic data that comes out. Any surprise, positive or negative, could send things swinging wildly.
But before we get into how investors can navigate this potential chaos, let's talk about the potential bright spots. The forecast does mention some reasons for optimism, right?
It does. Pro-growth policies like tax cuts and deregulation could provide a real boost to certain sectors. And while corporate earnings growth is expected to slow down a bit from 2024, it's still projected to be positive.
Okay, so some glimmers of hope amidst the storm clouds.
U.S. equities are currently at pretty elevated valuations. That makes them vulnerable to a correction, especially if the economy stumbles or if some unforeseen event spooks investors. And we can't ignore the signs of speculative excess in certain pockets of the market.
You're talking about things like cryptocurrencies and those leveraged ETFs everyone's been piling into.
Exactly. If those bubbles burst, the fallout could spread and impact the broader market. It's a reminder that risk management is paramount no matter how optimistic the headlines might seem.
So even with those potential positives, investors need to tread carefully. And it seems like interest rates are going to play a huge role in how this all unfolds.
Absolutely. The stock market is incredibly sensitive to the Federal Reserve's moves on interest rates. If they decide to hike rates aggressively to combat inflation, it could trigger a sell-off as investors reevaluate growth prospects and corporate earnings.
So all eyes on the Fed. Their decisions could have a ripple effect across the entire market. Speaking of ripple effects, let's talk about this concept of sector rotation that keeps popping up. Help me understand why this is such a big deal for 2025.
It's all about anticipating where the growth and therefore the returns are likely to be. With interest rates potentially on the rise, sectors like financials often benefit. They can earn more on their loans, and deregulation can sometimes boost their profitability too.
And you mentioned industrials as well. Why are they expected to do well in this environment?
Industrials tend to be cyclical, meaning they perform well when the economy is expanding. If you've got strong GDP growth, companies are investing building, and that's good for industrials. Plus, there's the potential for increased infrastructure spending, which would be a significant tailwind for the sector.
Okay, so financials and industrials. Potential winners in the sector rotation game. But what about those investors who are a little more risk-averse? Are there any safe havens in this unpredictable landscape?
Defensive sectors like utilities are often seen as safe havens, especially during times of economic uncertainty. They provide essential services that people need regardless of what's happening in the market. And with the possibility of increased infrastructure spending, utilities could see some indirect benefits as well.
So even amidst the potential volatility, there are options for investors with different risk appetites. But I have to ask, with all this complexity, all these moving parts, how can investors possibly make sense of it all and position themselves for success in 2025? What are the experts recommending?
Well, the overarching theme I keep coming back to is adaptability. Spread your investments across different asset classes. Stocks, yes, but consider bonds, real estate, maybe even commodities. And within stocks, diversify across sectors and geographies.
Don't limit yourself to the U.S., you're saying?
Exactly. Europe and Japan are showing some signs of promise. And while emerging markets are riskier, they also offer higher potential returns. It's about finding that balance that works for your risk tolerance and investment goals.
Okay, so diversification is key. What else should investors be focusing on? Any particular types of companies that stand out in this environment?
Quality. Quality, quality. Look for companies with strong balance sheets, resilient earnings, and solid management teams. These are the companies that can weather storms. They're the ones that can navigate those choppy waters without capsizing.
They're the ones who've got a skilled captain at the helm, right?
Precisely. And speaking of skilled captains, remember to keep a close eye on those policy developments, particularly around tariffs and immigration. Those decisions can send shockwaves through the market, so staying informed is absolutely essential.
It's a lot to keep track of. But it sounds like the potential rewards are there for those who put in the effort. Any final words of wisdom for our listeners as they prepare to navigate the investment landscape in 2025?
I'd say success in 2025 is going to come down to being proactive, informed, and adaptable. This is a year where you really need to be engaged with your investments. Do your research, explore different options, and don't be afraid to seek out advice from financial professionals. The more informed you are, the better equipped you'll be to make sound decisions.
That was words to live by. Well, we've covered a lot of ground in this deep dive, from the big picture economic outlook to specific investment strategies. Hopefully our listeners feel more prepared to tackle whatever 2025 throws their way.
I hope so too. It's going to be a fascinating year, that's for sure.
And with that, we wrap up this special edition of Earnings Digest. Until next time, happy investing.